Hello everyone. Welcome to the market opening bell for Thursday, October 30, your 10-minute guide to the stock market. Let's first review Tuesday's Hong Kong market performance. With investors awaiting the Fed's rate decision and the US-China summit, the Hang Seng Index snapped a three-day rally and retreated on Tuesday. It opened 75 points higher, briefly climbed 85 points to an intraday high of 26,519, then reversed, dipping 188 points at one point to 26,245 inches the afternoon session. The index closed down 87 points, or 0.3% at 26,346. The H-share index fell 91 points or 1% to 9,375, while the Hang Seng Tech Index dropped 77 points or 1.3% to 6,093. Total market turnover was HK $242.7 billion. Southbound Stock Connect recorded net inflows of HK $2.258 billion into Hong Kong stocks, with notable net buys in China Mobile HK $512 million. Hua Hong Semiconductor HK $396 million, PopMart HK $322 million, Meituan WHK $166 million, and Sanhua Intelligent Control HK $114 million. While net sales included Alibaba WHK $522 million, Tencent Holdings HK $356 million, and Li Auto W HK $292 million. Notably, Southbound funds have bought SMIC for 6 consecutive days, totaling HK $3.017 billion. Technically, the Hang Seng remains kept near 26,500, with support at 26,000, where both the 10-day and 50-day moving averages currently converge. On the mainland, A-shares rose then fell on Tuesday, but opened higher and rallied on Wednesday. The Shanghai Composite rose 0.7% to 4,016, the Shenzhen Component surged 1.95%, and the Chinex jumped 2.9%. Total turnover in Shanghai and Shenzhen reached RMB 2.26 trillion, up RMB 108.2 billion from the prior session. On the corporate news front, XPeng 9868 announced its overseas performance for January to September 2025, with cumulative overseas deliveries reaching 29,706 units, up over 125% year-on-year, leading Chinese NEV brands in 10 countries, including Denmark and Norway. In September, XPeng topped pure electric NEV monthly sales in Singapore, Malaysia, Thailand, and Indonesia. Xiaomi 1810 officially launched Phase 1 of its Wuhan smart home appliance factory, covering over 500,000 square meters with a total planned investment exceeding RMB 2.5 billion. The facility focuses on smart air conditioner production lines with an annual capacity of up to 7 million units, targeting RMB 14 billion in annual output value. Mass production begins next year, with one AC rolling off the line every 6.5 seconds. President Lu Weibing stated that Xiaomi's large home appliance business aims to reach RMB 100 billion in scale within 5 years and enter the top tier of China's home appliance brands by 2030. Baidu Group SW 9888 will open pre-sales for its Xiaodu AI Glasses Pro on November 1, with official sales starting November 10. Compared to last year's concept version, the new model includes features like camera, AI translation, object recognition, AI memo, and voice recording. Many companies released earnings in the past 2 days. HSBC 0005 released Q3 results at midday Tuesday, with shares jumping 4.4% to close at HK $106.5. Peer Standard Chartered 2,888 rose 3.7%. On a reported basis, pre-tax profit fell 13.9% year-on-year to US $7.295 billion, below the expected US $8.016 billion. down about 5.4% year-on-year. The shortfall was entirely due to a US dollar 1.4 billion litigation provision, including US dollar 1.1 billion announced yesterday related to the Madoff fraud case. On an adjusted constant currency basis, excluding notable items, pre-tax profit reached US dollar 9.1 billion, 9% above consensus. Revenue beat by 5%, costs were 1% worse, and credit losses 2% better than expected. Net interest income exceeded forecast by 4%, non-interest income by 6%. NII was US dollar 8.8 billion, up about 15% year-on-year. NIM rose 11 basis points to 1.57%. Annualized average tangible equity return was 12.3% versus 15.5% last year. Adjusted, it was 16.4%, up 0.5 percentage points. HSBC raised full-year NII and return guidance. Since the start of the year, it has announced 11 transactions to enhance investment capacity. Strategic reviews are underway for retail banking in Egypt, Australia, and Indonesia. No decisions yet. BOC Hong Kong 2388 reported after market close Tuesday. Operating income for the first 9 months rose 6.3% year-on-year to HK dollar 57.179 billion, though Q3 fell 13.9% quarter-on-quarter due to seasonality and volatility. Net interest income dipped 0.7% year-on-year to HK dollar 43.3 billion, with NIM narrowing 8 basis points to 1.54% due to lower asset yields. However, Q3 NIM expanded 1 basis point quarter-on-quarter on rising HKD rates and optimized deposit pricing. Non-interest income shone, with fee and commission income up 22.1% year-on-year to HK dollar 9.051 billion on active investment markets and wealth demand, though down 3.8% quarter-on-quarter. Operating profit before impairment rose 7.5% year-on-year to HK dollar 44.57 billion. Operating expenses rose 1.9% year-on-year, with cost-to-income ratio steady at 22.05%. Impairment losses were HK dollar 5.123 billion, up HK dollar 1.8 billion year-on-year. Annualized credit cost 0.4%. Q3 impairment was HK dollar 1.805 billion, down HK dollar 249 million quarter-on-quarter, with credit cost improving to 0.43%. A third interim dividend of HK dollar 0.29 per share was declared. China Merchants Bank 3,968 reported first 9 months revenue of RMB 251.42 billion, down 0.51% year-on-year. Non-interest income RMB 91.378 billion, down 4.23%, accounting for 36.34% of total. Q3 revenue was RMB 81.451 billion, up 2.11% year-on-year. Net profit for 9M was RMB 113.772 billion, up 0.52% year-on-year. Q3 net profit was RMB 38.842 billion, up 1.04% year-on-year. Performance remains solid, driven by retail and wealth management, supported by policy-driven loan demand, though NIM compression remains a challenge. China Ping An 2318 released 2025 first 9 months results, with operating profit trending strongly upward, life insurance growth robust, and insurance investment performance strong. 9M operating income was RMB 832.9 billion, up 7.4% year-on-year. Attributable operating profit was RMB 116.2 billion, up 7.2%. Q3 up 15.2%. Despite one-off items, Ping An, Good Doctor, Auto Home, convertible bond revaluation, Net profit attributable to shareholders was RMB 132.856 billion, up 11.5% year-on-year. Q3 surged 45.4%. Life and health new business value up 46.2%. Agent NBV per capita up 29.9%. Bancassurance NBV up 170.9%. Insurance investment portfolio achieved 5.4% non-annualized total return, up 1 percentage point year-on-year. US stocks hit record highs Tuesday and early Wednesday but pulled back after the Fed cut rates by 25 basis points as expected. Chair Powell gave no clear signal on a December cut, causing momentum to fade. The VIX fear gauge rose for 2 days to 16.4. The S&P 500 briefly neared 7,000 but closed flat at 6,890. The Dow fell 74 points or 0.2% to 47,632. Nasdaq rose 130 points or 0.6% to 23,958. Nvidia rose for 5 straight days, up 3.1%, becoming the first US company to surpass $5 trillion in market cap. It announced a partnership with Finland's Nokia and a $1 billion investment to support its AI development. Apple, now at $4 trillion valuation, hit new highs, up 0.2%. Tesla also gained 0.2%. Powell noted committee divergence on future rates and persistent inflation. Consumer and payment stocks like Costco, McDonald's, Visa, and MasterCard fell 1% to 2%. Microsoft after close reported Q1 September revenue up 18% to $77.67 billion, above expected $75.33 billion. Intelligent Cloud, including Azure, up 28% to $30.9 billion. Productivity and business processes up to $33 billion. Net income up 12% to $27.7 billion. Adjusted EPS $4.13, above expected $3.67. Shares down 3% after hours. Meta reported Q3 revenue up 26% to $51.2 billion, but net income plunged 83% to $2.7 billion. EPS $1.05. Due to a $15.93 billion one-time non-cash tax charge under Trump's Big and Beautiful Act. Excluding the tax, net income $18.6 billion, EPS $7.25, both beat. Q4 revenue guidance $56.59 billion, above expected. Capex raised to $70.72 billion. Shares down over 8% after hours. Alphabet reported Q3 revenue up 16% to $102.35 billion, first time over $100 billion. YouTube adds $10.26 billion, above expected $10.01 billion. Google Cloud $15.15 billion, up 34%. Net income up 33% to $34.98 billion. EPS $2.87. Shares up 5% after hours. Starbucks reported FY Q4 net sales up 5% to $9.57 billion, above expected $9.35 billion. Global same-store sales up 1%, first positive in nearly 2 years. But net income down 85% to $133 million. Adjusted EPS 52 cents below expected 56 cents. Powell's comments weighed on gold. The dollar strengthened. Spot gold fell to $3,930 per ounce, lowest since October 6. The DXY rose 0.5% to 99.14. Our stock pick today is Ximei Resources, stock code 9936. Ximei Resources is primarily engaged in the manufacturing and sale of tantalum-niobium metallurgical products, including tantalum-niobium hydrometallurgical compounds, tantalum-niobium metals and related products, Thanks to their superior properties, tantalum-niobium products have long enjoyed broad applications across numerous industries with stable underlying demand. In recent years, new growth hotspots have emerged, notably in tantalum capacitors, high-temperature alloys, superconducting materials, semiconductors, medical applications, new energy, and integrated photonics. In the first half of 2025, the group recorded operating revenue of 954 million yuan, up 5.7% year-on-year. Within the revenue mix, tantalum, niobium, pyrometallurgical products achieved a leap from zero to nearly half of total sales, marking a breakthrough in product structure, the key driver behind steady revenue growth. Net profit for the period surged 71.4% to 107 million yuan, with gross margin improving from approximately 21.1% in first half 2024 to approximately 23.7%. This was mainly attributable to further release of production capacity, a higher proportion of metal products, especially high purity metals, in sales, and strengthened process control and efficiency gains, including better utilization of recycled materials and byproducts, driving cost reduction and efficiency enhancement. The group is implementing a strategy of integration and scale, fully leveraging existing production lines while strengthening and extending the tantalum-niobium industrial chain. Ximei, Guangdong has now completed the 700-ton high niobium expansion and technical upgrade project to bolster oxide production capacity. Meanwhile, Ximei, Guizhou successfully passed second-round audits in April, June, and September 2024 for certificates including the Weapon Equipment Quality Management System, Energy Management System, Occupational Health and Safety Management System, Quality Management System, and Environmental Management System. Ximei Leizhou has fully completed civil engineering works, including foundation construction, main structure, interior and exterior decoration, and equipment foundations, laying a solid base for future market upgrades and high-quality sustainable development. The group is also committed to process solidification and technological upgrades, unlocking production line potential through initiatives such as high niobium drying and calcination automation upgrade, niobium solution ammonia absorption, ultra-high pressure membrane concentration, and key technology research for smelting tantalum. These efforts have led to higher direct recovery rates in tantalum-niobium hydrometallurgy, significant reduction in unit consumption for products like superconducting niobium ingots, continuous decline in energy consumption per unit for smelting tantalum and niobium, and record high comprehensive utilization of byproducts. Recommendation: buy at 6.2 Hong Kong dollars, target $7, stop loss at $5.85. I do not hold the above stock.